What's up, everybody? It's Mark Monroe, accompanied by my wonderful co-host, co-producer, and all things galactic. Give it up for none other than the wonderful.
Ooh, I'm so rusty. It's Charlotte GC in the place to be. What does it, cousins, on this fine, what are we, Tuesday? Yeah.
Yeah, it's not Thursday for us anymore.
Oh,
Wait,
I'm
is this episode live or is this another pre-recording? Like, how are we
no,
doing
this is all
this?
the way live.
Oh yeah, we are live. What's up, everybody? And shout outs to Shar, who is first in the chat.
Sure.
Definitely had your notification bell turned on. So she said, "What's up, cousins?" I want to know, just send me a DM if you know what's your real name, because we definitely got to give you guys some shout outs, especially for those of y'all that just be on it. So yeah, hit us up in the DMs. All right, so you guys know what to do. Go ahead and hit the like button. Go ahead and subscribe if you haven't subscribed yet, because there's a ton of great content by a lot of great creators here on the Come Up series, and I think that we're going to be growing probably sometime early next year. So you never know who else is coming to the stage. But either way, it's going to be fire. We're lit. So that's all there is to say about that. I guess I can just leave. We can end the episode on that. Just go ahead and cue the outro. I'm just kidding. I'm kidding.
Yo, Mark,
All right.
we do need to acknowledge some things though. Like
What's up?
y'all, okay, so things have been pretty intense at the Come Up series headquarters. We have 80 jillion projects going on at one time that are, some of them are related to the Come Up series and some of them aren't. So we just need grace, y'all, because last week was a doozy. We're going to do our best to show up, especially as we're in like this last year. But I just want to, acknowledge that, like, we are aware of that, even better. He's just like, look, I'm just here so I don't get fined. But yeah, Mark, I am excited about the other creators that are on the channel, because you essentially have the Come Up series 4 days a week, Monday through Thursday, with hitting various topics from taxes to estate planning to market overviews to different strategies, controversial topics.
Yeah.
So it's
soon we're gonna have to talk sports. I feel like that's just necessary. We're gonna have to talk sports. We're gonna have to talk art.
Okay.
We're gonna have to talk about those things.
I mean, well, next year, honestly, like, with
for sure,
not going live, we'll have the space and the bandwidth, and capacity.
We do not have the capacity,
right, to really, take the Come Up series in a new direction, but with the same like foundational principles,
with the same vibe.
Yeah, exactly. So anyway,
well,
Mark,
I mean, I can let the cat out of the bag a little bit. For those of you guys that know, I sit as managing partner by day for From the Culture, which happens to be the parent company for the Come Up series and many other great ideas in which that we're working on. And we're a software firm. So last week and this week, I'm pretty much on a deadline, a very hard deadline this week. And then on top of that, a few things have happened in the background where you have to put out fires on a consistent basis every now and then, or it could just be, once in a while. You never know when these things hit. They just hit, and you got to address them as they happen. And so the beautiful thing about it is that we built this wonderful platform for individuals like each and every single one of you that are watching, because not only do we get to see the evolution of each and every single one of you, but you also get to see the evolution of what's happening with myself and Jolene and many of the other creators on this platform, which is one of the reasons why I'm excited, because next year I'm very excited to bring some of those startups to the stage here on the Come Up series, so that way you all can get to know them and get to know exactly, where is it that I've been spending my time and where is it that Jolene's been spending her time. All those wonderful things, we get to bring those to this exact same platform, along with a few other great things. So that's kind of like what the things that are happening behind the hood. So when you don't see us live, it could be probably the fact that I'm probably doing code reviews, or we're probably having to knock out errors and bugs and everything else that need to get knocked out in order to stay on track. So just want to let you guys know that. So it's not like we're just trying to avoid y'all at all, because that's never our thing. That's not what we do here at the Come Up series. That's not even on brand. Our focus is definitely to make sure that we are consistently building tomorrow and making sure that each and every single one of you that are a part of this community or a part of this platform, that essentially that you see yourself a part of that as it pertains to what that tomorrow looks like. So that's our focus.
Yes. So Mark, let's get into well, let's kind of give it some nostalgia vibes, kind of, low key Trade Talk Tuesday or whatever. But let's talk
Uh-oh.
about the market. Let's talk about, what the Fed said, all of that. Okay. And yes, your favorite, Mark, he must geek out a little bit, y'all. He has to geek out on the new toy.
I can save this for an episode, an episode of its own. Like,
you should do an episode of its own, but I also don't think you
okay.
should leave folks hanging either. You know what I mean?
Okay.
So
okay.
let's just talk about that first. Like, let's get into, the AI battle royale between Apple and Meta, and who is winning this hardware life, Mark? Who is winning?
I don't know, but I can see it. I can see the picture. Okay. All right. So, and I knocked my headphones out somewhere, so I may have to like drop for a second to pick up my headphone. But who's winning so far? I wouldn't say who's winning. I would say who has an early lead.
Head start. Okay.
Yeah, who has an early head start lead? Because we haven't seen what Apple has brought to the table yet. And by the way, hopefully you guys like the cut.
Right?
Yeah. Shout outs to my wife Erica for cutting my hair.
Oh, wait, she cut your hair.
Great deal of trust there.
Totally.
All right. Okay, so let's talk about it. So pretty much Meta has, they originally acquired a company by the name of Oculus, because before then it was like back when it was Facebook, and then they changed it to Meta because they wanted to invest very heavily into the metaverse. I think that the long-term vision for Mark at Meta is pretty much the focus of like going from a VR space into mixed reality and AR. So that's VR and augmented reality, combining those two into the same space. And then, of course, getting us to the next frontier, which is probably holographic technology. That's huge. So, and you're probably going to see Vic in the chat every now and then, like putting out some nuggets there, and feel free to like put those as highlights, Vic, if you need to. But the interesting thing about it is that we haven't seen what Apple has brought to the table. Now, the one thing that like literally shocked the world when Apple had, did their announcement, which made everybody excited because, Apple's a little different. Like, there's a lot of tech companies out there that are all about feature bases or about like, okay, hey, we brought this amazing feature and everything else. And that's cool. It kind of reminds me of like the Samsung days where Samsung would just like throw you a ton of features. But then Apple would come out and be like, okay, that's great. We're not going to just do a bunch of the features. None of that. We're just going to give you the stuff in which that we think that you're going to actually use. And I think that that's exactly where Apple's going to start. I think that that's really where their starting block is. They're going to focus on entertainment. They're going to focus on productivity. And then I think that they're going to try their hand at gaming, though that, again, Apple hasn't really gotten into that AAA studio. And the interesting thing about Apple is, they work well with, developers. So for those of you that are software developers, you understand this. For those that don't understand our community, let me invite you in a little bit. So, if you ever go check it, if you ever want to know what it's like for us on the developer side, go visit developer.apple.com, and that's the developers portal. And a lot of these, tech companies actually have those things. And so what we've been doing on our end is they're now asking us, which apps are you wanting to optimize for the Apple Vision Pro? Now, that's one of the bread and butters of Apple, which is their developer community, as well as like pretty much their app community is pretty much Apple's bread and butter. So the fact that they have an entire ecosystem, an entire store ecosystem of apps that they can literally go from, iPhone, iPad devices, and even Mac devices, and bring those into the space of a goggle set, that's incredible. Now, for Meta, on the other hand, it's like, they've had to like literally build a store from scratch that's built upon their other providers as well. And so far, there hasn't been any other providers out there that have been able to do the same thing. I mean, we're not going to talk about Google in this Glass project, which failed, 6 months after it started. So, that's the interesting part. And again, it's like what they did also with like, okay, hey, not only did we give you these, mixed reality headsets, but then also they're giving you augmented reality, which is through that Ray-Ban collection, which is pretty cool and amazing as well.
Mm-hmm.
Now, it's interesting though, because here's the part where Meta actually learned something. Meta actually beat Apple to the punch, because I don't know if people were listening to this way back when episode that I was talking about, maybe perhaps last year, where I actually gave you guys a leak of telling you the the three different product lines that Apple's planning on doing with their vision series, and kind of like giving you the insight as it pertains to the years of where they're going to come out. So, where it was like each of those was a product number labeled with an N. And so now what we're seeing is product version 1, but Meta just said, okay, hey, we already knew that was coming out, but now we're going to challenge you to a duel. And not only will we upgrade, but we'll also bring out what you're supposed to be bringing out in year 2. We'll put it out in the same year in the Ray-Ban series, which is version 2. And girl.
But Mark, okay, that's cool now too. But Apple, they're used to someone coming out with something first, well, like a feature or whatever, and then they'll sit back, gather data, and then they will put it out as well. And people are still going to go towards what's,
Oh yeah, I
what's,
mean,
what's
come on. It's not like I think if anything, nobody's really going to leave the Apple ecosystem. But now they're
you
going to make a
can't.
decision of whether or not. Well, I mean, you can,
I
but
mean,
it's going
but
to be
it's so
tough.
cozy though. It's cozy
It,
here. Hold
it
on.
is cozy,
It's
and as we're
cozy.
moving into the fall, it's cuffing season. So
Mhm.
I mean, honestly, like, okay, let's get it down to seriousness, though. I mean, yeah, Meta did that because of the fact that, one, not only for the shock value, but not only for that, but also getting into those holiday sales early on.
Mhm.
But then also they realized that essentially that if we could just bring over just a few folks from the Apple side, they're still going to have their iPhones, they're still going to have their iPads and everything else. They're still going to be a part of that ecosystem. But if we could provide them with an experience that is also just as great, but not as heavy as price tag, especially given in this time where the
Mhm.
economics could possibly go up against Apple and coming out swinging with a $3,500 device. Now that's not going to be for everybody, and we understand that over time they're going to bring the price point down. And given that they have $166 billion in cash, I think that they'll be okay over the
Mhm.
next 2 years. So I think that this year is more so in the sense of, did they land it right with the developer community? And then two, given in the sense of the consumer basis of your early adopters, trendsetters, and folks that just want to be a part of the it crowd, but don't even understand exactly how it works. They're going to get a good idea as it pertains to what are those use cases look like, and are they strong enough to continue on? And that's always been the running argument across this entire space of, is this really something that can truly stick? And I will tell you, look, I use my like I stopped using my MetaQuest the 2 device after a while, because it was just like, okay, sooner or later your eyes hurt. And every now and then I like being in the mixed reality, but I don't like seeing mixed reality in black and white. But when they came out with color, like
Mhm.
full-fledged color and everything else, and I can see what's happening around me, that changed everything. And so shout outs to them for making that possible, because that's a game changer. And I think that if that is solidified, then it solidifies also the space for Apple as well. So I think that, can we really say who's a true defined winner yet?
It's too
No.
early to say.
It's way too early in the game to really to be able to decide that. You would have to wait till probably like version 2 of Apple in
Mhm.
order to really truly make that decision, because let's be real, Apple's going to make some faux pas in their version 1 that they're going to have to resolve in the next iteration. You have to take into consideration, though, which gives validity to the space, though. This is iteration number 3 for Meta, going from
That's
the
a good
first
point.
Quest to now Quest
Mhm.
version 3. And then now you're talking about competition within the space. It's like, okay, Tesla is saying that, okay, hey, we came out with Model S and Model X and there was no competition. But now that we come out with Model 3, now we're starting to hear about competition. So we're really looking at it into that. Like, I would say if you need a good arena to look at it from a set of lens of how is it that this story plays out, use that as an advantage of like, okay, hey, how did that story play out for the electric vehicle space, and then apply that same type of logic into this space as it pertains to wearable devices. Because I think the interesting thing that Meta is trying to make here is, they're trying to move technology and the consumer technology market away from the phone.
Yeah.
Like, that's the interesting thing. Like, a lot of folks didn't realize that, and I think a lot of people still don't realize that, is that Meta is now challenging Apple as it pertains to its ecosystem, because they're asking, okay, hey, what is Apple without their phone?
And that's
And then Apple's like, look, you gonna find out.
yeah.
And you're gonna find out that essentially, if you develop, like, the way that they're working it is, if you write an app for one, then you can write it for all. And I think that that's what Apple's ultimate target is. Write one app that serves for all apps. So whether it's TV, Mac, iPad, iPhone, Vision.
I mean, and it all integrates nicely, you know.
It
So
does.
there's that
It
front. But
does.
honestly, Mark, people are going to, I mean, you're a testament. You're probably their ideal customer, right? And you have both. You would buy both Meta products and Apple products, because
I
if
would.
Apple comes out with something, you're going to buy it. So,
I
and
mean, it has to, like, it still has to meet my criteria. I have
well,
a
it's going to meet
criteria of
your
how is that.
criteria. But what I'm
Yeah.
saying is, you're not going to just only buy one side's product. If we're talking
No.
about Apple versus
No.
Meta, most likely you're going to you
I'm
know,
a pretty agnostic kind of guy when it comes to my technology, because I always like to understand what it's like from the other side, you know, to see who's pushing the envelope of tech, because it gives you an idea of, okay, hey, this is possible now. Or it, like, some companies push the envelope of what's possible, and then some companies just perfect exactly what is it that the consumer base needs. And then, of course, you have your folks in whom which they're just completely behind the curve, and they just don't get it. And, you know, shout out to Vic also, because he mentioned shout out to Immerse. And so, which leads me into the next thing, because you're starting to see this divergence also, like, kind of like what we saw in the early days of iPhone versus Android. But remember, it was iPhone versus like 8 other Android companies. Like, that's the thing that a lot of times we miss. So will we be seeing Google step into the space? I'm sure we're going to probably see Google step into the space. We've already seen Microsoft try, what's a mulligan? We could definitely see that. There's a company called Immersed, which I actually discovered them through using the MetaQuest series, where, like, that's honestly where I do a lot of my work. So I actually work in that space where it's like, just throwing the goggles. It's raining outside. I don't want to see rain. So I just want to go work and, sit in the mountains somewhere and just work, and that's what I do. And so they made a goggle set as well. Like, imagine 4K, like, lenses in each eye.
Is it going to improve my vision? Because, man,
I don't know, but leave it to Apple. They did come out with a patent of self-correcting vision. So
yeah, I'm gonna
I don't know.
I'm gonna need to, because y'all, I cannot see without glasses. I am blind. I cannot see.
I do not understand what that feels like, but I definitely can empathize.
Yo, it's luckily I like glasses.
Definitely not a game.
That way, just put it that way. But Mark, okay, so we've talked about, like, the goggles and all that, and clearly AI is moving out of just software.
Well, should we talk about, like, how does it affect folks? Because if we're kicking it back to Trade Talk Tuesday, should we talk about how does it affect investment?
We should, but I do just want to mention that for those out there who pay attention, to the fashion world, you will know that our girl Naomi Campbell, along with some other people, I didn't see the other people, only saw her wearing it, like wearing those devices, those AI devices, and they can record, like, your conversations, and then the idea is that you can go back to a conversation and be like, okay, run that back for me. What me and such are talking about X, Y, and Z, like, run that back. And so you can see, even though it's not released, like, widely, like, you can see the breadcrumbs. We always talk about the breadcrumbs where AI is going to be fully integrated into pretty much everything that we do. Like, everything.
I think that Copilot technology, that's not a buzzword. That's actually, the next frontier. Like, it's definitely, like, we're seeing it happen. Like, for example, for us in the development community, like software development community, we see Copilot through GitHub services where it writes alongside with you, or you can say, okay, hey, I need you to write these things in a conversational format. And then essentially it'll pretty much put that there. And I think that that's where we're headed. I think that honestly, like, for each and every single one of you that are watching the Come Up series tonight. So if you're an entrepreneur, if you've got good ideas or whatever it is, like, I really want to, see if I can give you guys an early advantage, or like just give you guys some like breadcrumbs towards that early advantage. Think co-pilot technology. Like, how is it that you can embed, an AI co-pilot into, say, for example, your daily work? So for example, you're starting to see it in productivity apps like Office 365. But imagine that in, say, for example, if you do AutoCAD, or if you're an architect, imagine what that looks like. Imagine if you're using Copilot technology as an engineer. Imagine having conversations with an AI device, but then also using that as Copilot as a fashion designer when you're coming out with your line, and where AI is able to give you data, and on top of that, suggestions based upon that data as it pertains to improving your design. And we're just talking about, at the current time, we're talking about large language models, but then using those LLM large language models to literally go even further, to literally talk about like, okay, hey, will produce this for me, or like, provide me some samples, where it provides you samples within those specific facets. So those are the things in which that I really hope that people really pay attention to, because those are going to be the next $1 billion ideas. Like, those are going to be probably your next unicorns.
Well, Mark, so what's interesting about that is, okay, you can see, so we take that, what you just shared,
Yep.
and we think about just like human nature and like just like the background, like if we want to get meta and get deep, right? So we see that, okay, we came out of a pandemic and
Yep.
people were isolated. The internet actually, because people aren't going out as much. Well,
Mm-mm.
people are trying to be outside now, but now it's super expensive. But anyway, people are more isolated, like, and alone, and they're turning to their devices. So then if you look at
Yep.
it from the content creation side, now you're starting to see content that's more
AI
about like,
generated.
well, not even just that, but there's this theme of like, companion entertainment. So
Yep.
it's where, you listen to a podcast, and or you'll listen to, or you'll be watching, a YouTube video or whatever, and it's the content that's in long form now, because before it's like our attention spans like shortened, and now we can't be bothered. Before it was like, okay, I can only pay attention to you for like 10 seconds. Like, what's up? Tell me what you got to say in 10 seconds, right? No millennial
Mm-hmm.
pauses. Anyway, but like you can see now that the content is more about, it's leaning towards like the companion side. So meaning like as you are doing something else, you feel like your favorite, content creator is there with you. They're doing their thing. They're, talking about whatever
Yep.
topic is on their podcast while you're, maybe you're washing the dishes, or I don't know, you're doing something else, but you have them in the background. And
Yep.
so now we're starting to see AI is going to be mimicking that. And
Yep.
there'll be like AI companions. Because when I think about, I call ChatGPT, I call her Aisha, right? And that's my homegirl. And Aisha is like my thought partner. I'd be like, girl, what you think about X, Y, and Z? Because this is what I'm thinking. So where do you see this going, or whatever? So we're going to start to see more of these type of companion iterations, and it's really interesting how the two are mimicking each other, like
We're
real.
seeing that now. We're seeing that now. Like, for example, we're seeing it with, mental health,
Mm-hmm.
where like the vast portion of folks are actually turning to AI for mental health counseling therapy. So we're starting to see that play out. We're also starting to see AI start to take place in the financial, finance management, where you're seeing AI either manage portfolios, or also even giving suggestion as it pertains to how is it that you should craft a portfolio, how is it that you should, maybe even trim your portfolio and everything else. So you're starting to see more of that. And I think that honestly, you're going to see even more of those, different use cases. And, it's going to be interesting to see exactly, like, for example, imagine YouTube with, AI companionship. Like, imagine if YouTube, while you're watching a video, YouTube asks you questions based upon the context of the video to learn more about what is it that you think about the video, what is it that you're learning from the video.
If
And then on top of
Beyonce is
that,
asking me, That's one thing, or someone else that I would be paying
Well,
attention
but what if, say, for example, it provides data that also comes back to Beyonce as it pertains to her maybe improving maybe content or whatever it is, or even music. You
I
know,
mean, if it's
we're about to see a significant shift where, and I tweeted about this. I was like, look, pretty soon you're about to see synthetic social networks like literally come to the play. And what I mean by synthetic social networks, you're about to be asking how much of this is NPC, how
Mhm.
many folks are NPC, non-playable characters, and then how many folks are actually really posting, like, you know, how much of their content is actually real and how much of that is actually AI generated. It's going to be a very interesting question. Like, you know, if you look at, you know, even look at the technology, look at how the technology itself is changing, like Google Pixel's phone, right?
Mhm.
They're now moving into AI generated content to literally alter the entire image versus the original is no longer good enough. Okay, I see you with the AI lighting effects over there. All right.
Well, no, my laptop was dying and I had to switch some cords around. And so I was like, dang, the lighting. But go ahead.
All good, all good. So I mean, again, it's like, you know, it's getting deeply embedded across all different systems. And you know, I kind of warned about this really since day one, since we first came to the stage. You can't stop it. The only thing is like, you know, the people who are trying to stop it, the only reason why they stop it is because of out of fear. um Now, don't get me wrong, there's tons of regulation that needs to hit. Like, you know, it's so amazing to me how, you know, regulation has fallen so far behind. Like, think about it, Jolene. They
Mhm.
haven't even regulated social media networks yet. And yet
Yeah.
AI is now
I don't-
here.
Well, look who's in Congress. Okay. Like, okay. Anyway, so let's getting back. Like we have like 3 minutes, but I want to bring it back to the
We
question
can
you
keep it
asked.
rolling.
Okay, the question you asked earlier. You know, if we're keeping it, you know, on the nostalgia vibes and Trade Talk Tuesday, well, how does this
Yep.
all impact investors?
Yeah, so it impacts investors based upon, you know, the future. Like, you know, really, you know, we're in a season where we're probably going to see sales go up, but we're also going to see profit margins come down. Like, that's just the nature of the beast. You're going to start noticing profit margins are down, but yet their sales are up. And that's going to be probably the overall general consensus in the short term. Now, when we're looking at the companies that are making those capital investments now within these services, then you'll probably see that their costs come down, or you'll see the early costs. You know, they'll be taking those hits in the cost in the early end. But
Mhm.
then later on, if you're thinking about it over the next, you know, set of years, you know, pretty much the cost comes down, and then ultimately profit margins go even higher. Um, and that's really where I would probably say, like, look towards the companies that are making those investments. You know, you want them to be making those investments now. Now, of course, you'll see the stock take a hit because of the fact that, you know, of course, in the short term, no investor wants to hear that you're like spending money. They always want to hear that you're making money, like making more money and becoming more and more profitable. That's the name of the game. But in order to do that, you have to spend, you know, some capital. You have to make investments, and some of those are going to be misses. Some of those are going to be straight up swing and misses, and then others are going to be winners. So if I'm looking at it, like, the companies that I'm definitely paying attention to, is every one of the tech companies just literally solidified their dominance for the next 10 years. They just solidified it. Why? Because everybody's going to need to use AI. Everybody's going to be needing to use AI, and even beyond generative AI, even if we're thinking about enterprise and small business AI. And small business AI is just going to be just completely different. They just haven't really talked about it yet, but it's, trust and believe, it's coming. You know, Google is now starting to circle around, you know, those waters.
Sure.
And pretty soon Amazon's not that far to follow.
Mhm.
Um, it's interesting. It's interesting, like, when we think about it, you know, Apple has made great strides, and it's going to be interesting to see how their AI literally plays out. You see a little bit of their AI in their text message, and the iMessage is very interesting. If you're leaving voice messages to people, have you noticed, like, it starts to transcribe, and the transcription is like almost perfect?
Oh, I don't leave voicemails, but when I receive
If you
them,
ever just get the chance, just send
I
a
look at
test.
the
Just send a
transcript.
test.
Yeah, I look at the.
Yeah, and the transcript is like spot on. Like, yo, like, for real.
Although they do something
Um,
wrong, Mark, every time.
you know, I mean, maybe you should write to Apple and be like, look, I'm gonna need y'all to get this right. Um,
It's actually
but
Google
yeah,
that does that.
oh, well, I don't know what to tell y'all. Like, y'all have always had a love-hate relationship, so
Hating on your girl. Anyway.
So, I mean, but yeah, I mean, looking at like what those services look like across the board, you're going to see that a lot of the companies that we've talked about, like, a lot of folks ask me, hey, Mark, why is there no pick list? Because there really is no necessary need for a pick list anymore. The pick list is like pretty much, it would be like pretty much us creating a new image that sits on top of it, but it's pretty much still the same thing across the board. It's just like, okay, hey, what does the flavor look like? And if you apply pretty much all those things on the pick list, of course, some of the things will fall off because that's just part of the nature of the beast. But the vast portion of the companies that are on the pick list, I mean, they're pretty much the companies that I look at and I'm pretty excited about as it pertains to the future. That's really where it stands there when we think about it. So looking at the future, when I'm looking at tech earnings moving forward, if I'm looking at it in the short term, still see some short-term pain for some of the companies. And I'm sure we're going to have probably like a rapid fire there soon. But in the grand scheme of things over the next, like, say 3 to 5 years, if I'm looking at it from a venture capital standpoint, if I'm putting on that hat, yeah, they've just solidified themselves over the next really 5 to 10. And the space is going to and these are the times in which I'm very excited about over the next 9 months is really going to really set the stage for that. And then after that 9-month period, the next 3 to 5 years that we're going to go through, you're about to see rapid amounts of expansion and growth. As soon as the market gets to a place where it starts to die down, a lot of the fanfare and everything else from all the drama of high interest rates, inflation and everything else. When inflation comes down, what's going to be the conversation?
Where are we putting our money?
Well, no, by the time when you actually but that's the point. If you're asking where you're going to put your money by the time that inflation has come down, then you're already too late.
Yeah.
That's the point. Like, money is now being deployed, in a responsible manner. Let's first put that there, in a responsible manner. But, people are making the necessary investments based upon what they see over the next 5 years of, like, literally building a position towards who's going to be that winner.
Well, and
it's really over 3 years, but
there was an article on, I think it was on Market Watch, and they were talking about, like, during the month of October, things are down. And it's been like that, like
retest.
Yeah. But, what's interesting about that is that
the retest already happened.
Well, no, I was going to say, like, let's say that you sold everything in May, right?
Yep.
And you're looking to get back in the market. It's like, you probably would have been better off holding on to some
staying in it.
Yeah, because there's that dip. But then I feel like the whole conversation around when they're saying, like, oh, October is a low, historically like a low month. It's like, you still need to hold on to whatever you had. I mean, assuming you got a good price on it, because come November, that's usually like the takeoff. Like, I think it's in November to April is like the takeoff period. But for those who are, let's say, you are like re-entering the market, when things are low and you are re-entering the market, or if you're starting a new position on your rolling fours that doesn't have anything to do with, the strategies for your other things. This is really for those who, maybe have been sitting on the sidelines for a little bit and now you're looking to re-enter, like, during these historic lows. This is when it's the time to, like, be considering that. I mean, obviously, do your research and make sure you're getting the best price for things, but historically, October has been super duper, like, low, and then it starts to kick back up November through April. But
yeah,
you still have to do your research, though, because that might not be the case for the sector you're investing in. But that's just like
exactly. You nailed it right there on the head. It's like at this point, it's going to be about sectors, and it's going to be about, like, okay, hey, cash in this market is going to be who's, like, it's really king and who wears the crown. Because here's the thing. When cost of capital is high and when you're burning through cash, then that cost of capital is going to cost even more to essentially burn. And that's why you see in the startup world, valuations get cut when cost of capital gets high. or when we're in high inflation environments, like those same valuations in which that you were rocking at, they're no longer rocking at that valuation because now it's looked at as expensive. Just like the same way when you go to a grocery store, that's considered expensive. When you go see a gallon of milk that was once upon a time being sold for, let's say, $5, and then now all of a sudden it's sold for $9, it's like, it's just not going to hit the same. So it's the same way that we look at it from, like, take it from all the way from your grocery store, or whatever it is, your Starbucks coffee, however you see that, and then look at it all the way up to, say, for example, the highest level of things, whether it's autos or things on the industrial standpoint. The rules still apply. They don't change at all, because it's still the structure. So in this typical market, that's why I posted, I think last week, I said, honestly, the name of the game is really focus on companies that have cash and lots of it. And, don't just focus on the company. And just because they have a lot of cash, here's a caveat. Just because they have a lot of cash, that means that, okay, hey, they're sitting on a lot of cash and everything else, but yet they got to be doing something with the cash. This is where a lot of those energy companies got caught. Like, and it's going to be interesting to see over the next 12 months, who's who within the energy sector, because when they were making all these exorbitant profits, when oil prices were high, and yet, the consumer market was there. Now the demand has kind of like fallen out in the oil market, or is starting to fall out. But yet at the same token, those valuations are also starting to get cut. But they were the ones that were making investments. You should probably see some of the results of that over the next 12 months versus the ones in which they were just buying back shares and just paying a dividend. And, when it comes down to it, when people start looking at, okay, hey, well, this is a what have you done for me lately market. So what is it that you've been working on now? And when we're like, oh, well, we returned you guys, like, we bought shares to boost stock price, and then ultimately we returned dividends back to y'all. And so, I mean, and that's one of the things that why we look at energy, in the sense that it doesn't really move that heavily. It has its moments where it moves, but for the most part, it kind of just sits there, kind of like flat. And that's normally the thing that where you look at most portfolio managers, that's the reason why they hold things like energy within the portfolio, because it's not too heavily volatile. And at the same token, it's just a major thing within the portfolio that when things get volatile, then essentially it's like oil kind of like picks up, and then that's when you gain some of that value in oil or energy. And then essentially when things start to die down, and when it's dying down, you start to see the other parts of the portfolio start to outperform. So it kind of balances out things. And that's the reason why when you think about portfolio balance or rebalancing, that's normally what's transpiring. So when we look at tech earnings moving forward, or when we look at earnings period, you got to ask yourself, okay, hey, well, what is it that really that we were expecting from this quarter? That one, that we didn't already know. And then two, what are the results of it that, again, that we didn't already expect? So if it was that great, where it's like, okay, beyond our expectations, now we ask the question, why was it so great? Or if it was bad, why was it so bad?
Look at those factors.
Yep.
Okay, so before we leave, let's talk about earnings. We got some earnings next week.
Okay.
I got to pull up the calendar, but I know off rip that Tesla and Taiwan Semiconductor report next week. So, Mark, let's play a game. We haven't played a game in a long time. Let's play a game
I like
called
games.
Beat or Miss.
Okay.
Okay, so basically, I'm going to ask you. I'm going to say a company.
And do I have to say beat or miss on the top and bottom, or just period?
Let's just say just period to keep it simple.
Okay.
But your reason why.
Okay. Can I also add in another one? Can I just say mixed also, if that's
Yeah.
Okay. So
I'll give you that liberty.
Beat, miss, or mix?
Yep. Mixed. Yeah.
Okay.
All right.
Okay.
All right. So off top, we know this is all based on next week. So next week we have Tesla reporting earnings. You know what's been happening in the news with Tesla. Okay. So hit. But I said no, I didn't say hit. I said beat, miss, or mixed.
Yes. Okay. So I'm gonna say mixed.
Okay.
Like, I don't think that they're gonna miss. because that's one thing that we're looking at. We're only looking at, like, say, for example, delivery and production numbers, but
Mhm.
there's other parts to it. And, I think that the reason why I'm giving it a mix, because I still think that their profit margins are going to, like, when they have to bring down vehicle costs or vehicle sales costs, then essentially that's going to hit profit margins. So that's the part that makes me a little bit negative. Though that at the same token, that's a good way to maintain demand. Do we
Mhm.
see the demand in the vehicle where people want to buy the Tesla dropping? No, but I think that the price also scares people, given in the sense of what they have to pay for, in other arenas. So do I think that, honestly, on a like, yeah. So, and the other part is, I think that on the top side, as it pertains to revenue, I think
Mhm.
that that's going to be the major hit. But I think that as it pertains to an EPS, I think that that's going to uphold the stock. So that's the reason why I'm mixed on
All right. Oh, Baba Tunde, he said, well, Tunde, sorry. He said he said beat. So that's
it.
interesting.
Yeah.
What do y'all think? You think it's
Yeah. And feel free to type it in the chat. We see it. So, I
yeah.
mean,
I have to chat. Normally I try to keep the chat down so I don't like
I
give it.
think the part that's, like, literally hurting the stock is the fact
Mhm.
that they had that period of time where they had their factories on pause, and that literally kind of, like, I think that that's going to be the sore spot for the earnings right there. But I think that a lot of investors, I think they've gotten over that. So as long as the bottom doesn't fully fall out of the, you don't throw the baby out with the bathwater, as they would say.
Mhm.
If the bathwater is out but the baby's still good, hey, let's go.
All right. All right. How about Taiwan Semiconductors?
Taiwan Semiconductor. I think demand is still high.
Mhm.
I want to see if PC sales are starting to make their comeback, though. That I think that their embedded systems and all that other stuff is good. Of course, there's those tensions as it pertains to what's happening with China, but I'm going to step on a limb here and say that I think that we're going to see a beat across the top and the bottom line for Taiwan Semiconductor. I think that we're starting to see a lot of orders ramp up going into next year. Like I said, high sales market. And if we expect high sales market, but yet low profit margins next year, then I think that that's going to be advantageous for suppliers, like, for example, Taiwan Semiconductor.
All right. Curtis Freeman said miss, and Kechi said mix.
Dang, everybody's just disagreeing with me today. That's
Elon
that's
said it.
okay,
He said Elon said it on his last earnings call, and then Louis says miss. So I don't know if you. Well, Ikeche was talking about Tesla, but now we're talking
Yeah.
about Taiwan Semiconductor. So, all right, all right, all right. Let me see. Okay, I'm pulling up Monday. Okay, I don't see anyone I want to talk about for Monday. Hold on. Let me look at Tuesday. We have 27 companies reporting on Tuesday.
Wow.
These all look like banks, though, for the most part.
Okay.
All
So I
right.
think that banks will be, if anything, banks should be doing pretty well. I mean, of course,
Mhm.
they had a lot of expenditures this year, and then, of course, there's a lot of debt that's also surfacing. So I think that out of the banks, if I'm looking at it across the entire board, I'm going to
Mhm.
go 50-50. I'm going to say 50% are going to be, and I think the other 25% are going to be mixed. And I think another 25 is going to be, they're just going to miss. And
Okay.
so if I'm looking at it at regional banks, I think regional banks are going to struggle. I think big banks are going to do just fine.
Okay. Okay. Is there any company for next week who you're excited to see what they do?
Who, me?
Yes, you.
Not really.
All right. What about this is just all over the board. Okay,
Okay.
what about let's talk about airlines because
Oh,
travel is
Lord.
being wild. So I
Travel
know
has been wild.
Alaska's going to report. I mean, they're not that big, but they're local here. So anyway, Alaska's
Yeah.
going to report. So what's your
Cancellations are going to be the name of the game. Cancellations, and then the expenditure costs. If their expenses are high, then I expect to miss across the board. Like
okay.
those things, like when you don't have travelers and when you have cancellations, and then on top of that, it's like when you have to give up, some of the travel line of, like, where destinations are,
Mhm.
that can really hurt a business. And the travel industry, they've been hurting significantly. It's kind of like they haven't really stepped on any type of solid footing once they think that they're on solid footing, and then you know life throws, hey, another stone into the water. So honestly, I'm looking at it. I'm very mixed on the travel industry, but
Mhm.
as it pertains to American Airlines and some of those other players, I feel like we're going to probably be seeing some weak earnings.
Okay.
though we could be seeing, but though I think that we probably may see some upward guidance given the sense of holiday travel. But if their guidance is a little bit low on holiday travel, then that could be a very telling sign as it pertains to people, because I think that people are wanting to stay home this year
You think so?
versus going to do all that travel. I mean, hey, high inflation environments, hotels and everything else. Look, unless they're going to make those adjustments as it pertains to prices on a per
Mhm.
night basis. Ugh.
Well, I mean, me personally, if I think about it, I normally would have more trips scheduled, but I'm feeling more on the cozy side, and staying in and not
Mhm.
having, traditional, like normally we're on a beach during this time, um, and I kind of just feel like, let me see if it's gonna snow here. Like, I want to have like, no, I do. I want to have like that little, cozy moment.
You can
But
always go check out Fargo, Dakota.
no. No, 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 no. Okay. Yeah,
Below 20.
no. Absolutely. See, no, that's doing too much. Oh, Louis said a July cruise. Okay. I don't know if I'm ready to get back on
Hello, that's July. We're talking about Q4 here. I'm
no,
like,
he's
what are
saying
we
he's
talking?
going he's going far, far away somewhere.
Oh, well, hey, look.
Okay, so I do want people to notice, the indicators, that you talked about for each
Yep.
sector. You're like, when it comes to airlines, it's going to be about cancellations. When it comes to Tesla, it's going to be about deliveries. And those are the main things y'all got to pay attention to for like when you're looking at earnings and you're trying to decide like, okay, is this going to be, a beat, a miss, or mixed?
Yeah, I mean, you got to look at what makes it like. Okay, here's a cheat code for everybody. Like, not really a cheat code, but just some study notes. When looking at companies, when we talk about the things in which that would make them great companies,
Mm-hmm.
okay, well, write down for the companies that you have what would make that what would what would determine for them a good quarter. Okay, and that pretty much can be the benchmark. So it could be the benchmark for the upside as it pertains to a good quarter, or it can also be a benchmark for the downside as it pertains to a bad quarter. And then if you're just pretty much the closer that you are at the line, then that's pretty much mixed. That's mixed as it pertains to not high, not low. It's just in between, mid. So that's the way I look at it. So, for example, if you look at travel, what dictates travel? What dictates good airlines? What dictates, like, for example, whether or not this airline is doing well? In order for you to be an airline, you have to have travelers. You have to have destinations. You also have to have, like, the biggest thing that can also, like, potentially hurt the travel industry is also fuel costs. So if fuel costs are high, then that also is a major expense. If, say, for example, you have folks that go on strike, or if they wanted pay raises and everything else, well, that also has to get factored into the cost. So notice how I'm starting to put together benchmark items or benchmark areas in which that I look at and say, okay, hey, is this high? Is this low? What are the adjustments here as it pertains to expectations? If I'm looking at it for, say, for example, a Tesla, of course, yeah, we look at deliveries and production. Okay, that's one thing. But then we also look at price. What was the price of the car versus what it's like? What did you adjust the price of the car versus what it's supposed to be? And is that a sign that inflation is starting to come down? Or is that still a sign that inflation is going up? If inflation is high, then essentially that's going to hurt you because of the fact that you have to bring down the cost in order to meet the demand. Because demand is still there, but if the price goes well beyond where the demand is, then you have to bring the price down in order to meet that demand in order for things to continue to keep moving forward. And that's what Tesla's doing. It's not like, and sooner or later, sometimes demand rises. And when we've seen those environments, look at the chip sector. Demand was ridiculously high during the pandemic. And then what happened to PC and chip sales? They skyrocketed. Why? Because there wasn't enough supply, which ultimately jacked up the price of things. So when we look at those types of benchmarks across the board, those are the things in which that we can dictate and say, we can look at and say, all right, well, this is how I can determine exactly how is it that I see the quarter. Now, whether or not I'm right or wrong, that's one thing, because that's just my opinion. And of course, I'm not sitting there looking at the financials every day of the company.
Right.
Like, the people that work there, they probably have already seen the financials, but don't go ask them, because then that would be considered insider trading. But the thing is that we look at and moving forward is we wait for the print, and then the print tells us, and then we chew on the data. But yet at the same token, we're looking at the same data over and over and over again until they come out with another thing, which creates another business model for them. But we're still looking at the same things as it pertains to their benchmark, as it pertains to performance.
Right. So we look at what constitutes a sale for that company, what constitutes expenses, and then you have your economic factors like inflation, fuel costs, like look at like those kinds of things. So sales,
I mean,
wild card.
Is the business model good? Where the market is the business model good? One, does the market like the business, and does the market like literally find value in the business? And then two, the market can find value in the business, and the business model can be good, but does the economics fit the business? If the economics don't fit the business, then the business is going to struggle. If the economics support the business, then essentially you're going to see the business flourish. So, and that's why when you see in certain environments, like for example, in high inflation, like notice when you see that, like, for example, high interest rates and oil costs go high, then, well, in a high interest rate environment, then that's going to hurt companies like Tesla. Companies that are carrying on X amount of debt on their books, then that's going to hurt them. In a low interest rate environment, then that's good for them. Now, also when fuel and energy costs are high, then that's going to benefit companies like, again, Tesla. And when those costs are low, then that's going to be kind of like an interesting situation where you place Tesla, because now you have to choose, like, okay, hey, where do I want to get in? Like now there's potential for diversification. Like that's the way that we look at it. That's the reason why you saw treasury yields at a place where it's like, okay, hey, we're seeing treasury yields at astronomical rates, but now it's like, okay, hey, if I want to hold, which one would I rather hold? Would I rather hold on to a company like Tesla over the next month, knowing that essentially that it could fall by 3% or 2%, or would I rather hold this 1 month bond that gives me a 5.5% interest rate return? And see, when the interest rate yields come down, now it's like people start to look at equities as the thing, because of the fact is like, okay, hey, the alternatives start to decrease as it pertains to value.
Yeah. So y'all, I
said a lot.
Yeah, actually, but that's a good way of like looking at things overall. And I just keep thinking about the cousins that have been sitting on the sideline and maybe gotten like a little discouraged, like just dip a toe in. As far as I feel like this is a good episode to like dip a toe in as far as like getting reacquainted. Like maybe, you have to go heal somewhere for a moment, and that's okay. But it's time to get in. It's time to make this money. So anyway, Mark, it is 5:53.
Winners don't stop playing just because the other side starts to play.
That's right. It's 5:53.
I gotta roll.
Time. So
I gotta go do the other part of go serve the other side, the thing that makes me look great.
All righty. Well, this has been lovely, Mark.
Yeah, thank you guys so much for watching. And if you guys liked what you guys heard, go ahead and hit the like button, because we would greatly appreciate it. But also, if you have questions, go ahead and write them in the comments down below. We see your questions and we try to answer them as expeditiously as possible. And of course, be sure to hit the notification bell so that way you can be aware of some of the other content and other content creators. And of course, people like us that are pretty cool and awesome. When we go live or when a new video posts, then you're in the know. So that way you can come check it out. Be sure to share this with somebody. If you think that, that you've been having conversations and you're like, hey, this is spot on exactly what I was trying to explain to a person, share it with them. Because our goal is to get the message out, and it's free. So until next time, I'm Mark Monroe.
And I'm Jillian GC, and the place to be.
And this was your come up. We'll see you in the next one. Peace, y'all.